Buckle up for a déjà vu of the stock market slump we experienced last year. That's the urgent warning from none other than David Rosenberg, the president of Rosenberg Research. In a recent video shared on his firm's YouTube channel, Rosenberg's voice is laden with concern as he highlights a series of mounting risks that the stock market seems to be underestimating or perhaps willfully ignoring. From deflation gripping China's economy, the specter of increased borrowing costs for the U.S. government due to credit rating downgrades, to a looming credit crunch for U.S. regional banks, and the imminent restart of student loan payments that could drain the spending power of young Americans, the scene is set for a potentially tumultuous time ahead. Is the stock market blinded to these impending headwinds? Rosenberg seems to ponder, his voice tinged with a mix of incredulity and caution. Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button. Leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. Amid the bustling world of investment, a stern and seasoned voice has raised a chorus of caution once again. David Rosenberg, the authoritative figure behind Rosenberg Research, is sounding the alarm with an air of urgency that resonates beyond the charts and figures. His words come as a wake-up call to those navigating the intricate tapestry of global markets, hinting at a stormy season ahead that might echo the unsettling echoes of the past. Rosenberg does not mince words as he identifies key harbingers of potential turbulence. The shadows cast by China's deflationary struggles loom large, casting an uncertain pall over the global economic landscape. The U.S. government, in the throes of fiscal challenges, faces the grim prospect of escalated borrowing costs following a credit rating downgrade. Meanwhile, a tightening credit noose threatens to ensnare several U.S. regional banks, a foreboding sign that credit crunches might not be confined to history's annals. And then, there's the ticking time bomb that might reverberate across generations: the resumption of student loan repayments. A financial burden set to descend upon the shoulders of young Americans, potentially curbing their future spending aspirations. Rosenberg's poignant question lingers in the air, heavy with implications. Are we truly prepared for these converging storms? Or are we once again sailing towards a precipice, blissfully unaware? But the stark reality doesn't seem to have truly sunk in. The stock market, in Rosenberg's view, is caught in a dangerous dance with delusion. As he eloquently phrases it, the market appears to be priced for perfection, oblivious to the brewing tempest that threatened to shatter such idyllic visions. The equity risk premium, a pivotal gauge of market sentiment, has dwindled to depths not seen in decades. S&P 500 companies find themselves perched atop the peak of historical expensiveness, a precarious perch that often precedes an arduous descent. Rosenberg doesn't merely cast a grim outlook. He backs his cautionary tale with data-driven insights. His firm's Strategizer tool, a crystal ball of sorts for market trajectories, reveals a troubling low in the projected returns for the S&P 500. The numbers eerily resemble those of a bygone era, January 2022, when the markets embarked on a precarious journey, culminating in a nearly 30% nosedive over 9 months. Drawing parallels with the past, Rosenberg raises a stark yet vital choice before investors. In a market teeming with sky-high valuations, he advocates for prudence, a strategic pivot away from the uber-expensive U.S. stock market. Instead, he steers the spotlight towards undervalued and shorted U.S. treasuries, a potential sanctuary in uncertain times. Expanding horizons, Rosenberg casts a favorable gaze on Canadian and Asian stocks, with the caveat of avoiding China's perilous embrace. The age-old haven of gold also emerges from the shadows, beckoning like an old friend in times of turmoil. It's a nuanced mosaic of choices, painted against the backdrop of potential pitfalls and shimmering opportunities. Yet, Rosenberg's voice doesn't merely echo within the realm of financial forecasts. It resonates as a clarion call, reverberating through the annals of economic history. Drawing parallels to past cataclysms, the haunting specter of 1929's Great Crash, the haunting reverberations of the early 2000s dot-com bubble, and the haunting collapse of the 2008 housing market, Rosenberg invokes the lessons of yesteryears, imploring us to tread carefully in the pursuit of prosperity. Moreover, his warning transcends numbers and charts, cascading into the realm of personal finance. As inflation surges and interest rates scale treacherous heights, American consumers find themselves balancing on a precarious precipice. Savings erode, credit card debts swell, and amidst the gathering storm clouds, an unsettling truth emerges: a painful recession might not be a mere hypothesis, but an imminent reality. In the end, Rosenberg's message is a symphony of caution and wisdom, a melody crafted from the strands of historical patterns, economic foresight, and a sincere concern for the well-being of individuals and economies. The looming question echoes, an invitation to introspection. Will we heed the lessons of the past, navigating the labyrinth of risks with prudence and insight? Or shall we forge ahead, blinded by our own complacency, towards a future whose shape remains uncertain? Amidst the whirlwinds of economic uncertainty and the echoes of history, what steps do you believe individuals and governments should take to navigate the looming challenges and forge a path towards resilience? Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.